Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. But I'm here to tell you that this is the worst lecture that I have ever done in my entire life. It's horrible. It sucks. I don't think you should stick around and listen to it. You know what I mean? So, yeah, don't. Just click off now. All right? It's the worst lecture that I've ever done in my entire life, and I don't think it's worth you guys putting even 30 seconds into. But if you want to, here's the lecture. Let's get started. This week's lecture topic is pivots and reversals. It's always nice to know when a stock is likely to change directions because there's money in direction changes, right? That's basically our job as traders, is to find out what direction a stock is likely going to go in the next 5 to 30 or maybe an hour or something like that. And there are various ways that stocks pivot. And there are various indications that a stock will likely pivot. These are helpful not only for entry points, but they're also helpful for exit strategies, right? You want to know, hey, this is the top. It's probably not going any higher. So there's definitely a lot to learn with regard to pivots and reversals, and it's one of the core issues in trading is, right, what is the stock going to do next? I mean, that's what technical analysis trading is, right? Using past price action to help predict future price movement. So that's what we're going to talk a little bit about today. But before we do that, this one I have used before. I apologize. It's been a while. You probably don't remember it. But let's talk a little bit about when will the insanity stop. All right. This one's another, I put this one in here because it shows actual conversations that people have. Okay. People really talk like this, right? This is a text thread, right? Haha. But nah, seriously, I did kind of buy into it, so now I'm screwed, right? You're like, what? Cut losses and move on. Great advice. You lose enough money, you will learn. That is true. This is true, right? What if I lose everything? Then what? And then this is the part where it gets sad. Then you learn next time. Took me 2 times blowing up my account to learn. For others, it may take more than 2. This is where I have serious disagreements. Serious disagreements. You should never blow up an account. If you come to Live Traders, you should never blow up an account. Because if you listen to what we say, you're risking $5 or $10 a trade. It's pretty damn hard to blow up an account at $5 a trade, isn't it? I mean, shit, you have to lose 100 trades in a row to lose $500. And I don't think most people are going to be in a soup kitchen or in a tent on the street after $500. So clearly these people don't have money management. All right, but this is a great example of what other people do. And the guy goes, damn, or bag hold and hope it comes back. You just won't be able to trade until then, but it will happen again. Luck will run out. So my point I'm making is this person is actually giving intelligent advice. It's actually very good advice. And that advice came from what? Negative experience. And the negative experience here was blowing up 2 accounts. Okay? I'm trying to tell you, if you come to Live Traders first, you'll never have to blow up an account because I'm going to smack you over the head before you do so. But this person did learn. You can tell by how they're talking. Luck is going to run out. Cut losses and move on. It's true. Well, this is one account. Would it be wise to double down if I had the money and dig? Now, why am I showing you this? Because this person at the top gave good advice. Cut losses and move on. Your luck will run out. And yet, despite those 2 comments, what does this person say? Would it be wise to double down if I had the money and dig myself out? They didn't listen to a damn thing this person said. Cut losses and move on. Your luck's going to run out. Next question. Should I double down? Why am I showing this? Because this is what most people do. Someone smacks you across the face and says, stop being stupid. And you just can't help but being stupid, right? It would be another gamble. Be a man about it. Grow some effing balls. Admit that you effed up and you suck at this because you have no self-discipline. Cut law. I mean, that's me talking, and that's not me. This person is not me. Okay? But that's how I sound. And yet, do you think this person probably did that? No. Take it on the chin. Own up to your mistakes. Stop drinking the hopium. If you average down and it keeps tanking, then what? This is fantastic advice. It's great advice, but it came from someone who had to blow up 2 accounts to learn that. And this person still doesn't want to listen. Where I'm going with this is try your very best to listen to people that have more experience than you, because they're giving you their advice based on that experience, the experience that you don't have yet. Okay? And if you don't listen to that experience, you will be the experience. And you don't want to be the experience in this case, trust me. Okay? So, great advice from this person. They got it through experience, and you can see the other person's not ready to listen. It's that age-old saying, when the student is ready, the teacher will appear. All right, let's move on. Pivots, reversals, and a little bit of volume in here. Knowing the turn. Let's just dig right into it. Okay. You guys have seen this slide before. Some of the other ones are newer. We have a stock here that's just chilling out, going a little lower, hanging out, and then a wide range bar takes the stock lower, couple consolidation bars, and this is your entry right around 20, and your stop loss is like 20, 25. I'd probably give it more, maybe 20, 35. And then the stock tanks. Okay? And then you get to the bottom, and what kind of volume is this? What kind of bars are these? What kind of bar is this? You want to read the whole picture in context. Well, it started out as a stock in a downtrend with a great trade. It really was. It was a really nice pattern. Then you have 1, 2, 3, 4, 5 bars. 2 of those bars are super wide range, and the other 3 are wide range. How do I know they're wide range? Because I'm judging the stock off the previous day's range. Look at the previous day's range. Look at today. Wide range igniting bar to start the pattern, then a wide range igniting bar when its pattern triggers, and they're all wide range bars, just some are like super duper duper wide range bars. This stock doesn't do 75-cent bars. In fact, the previous day it was like 20-cent bars. So when you start seeing this and volume starts to pick up and the bottoming tail comes in, this move is over. So when you say, is there a pattern here? The answer is, you could argue, yes, it's a mini climactic, a mini parabolic. This is like every trader's dream. You get an interesting or a really good initial entry, and then you get what I call a reverse double helix, which is you get to go in the same trade, same stock, but the opposite direction. So yeah, you could have bought this down here at like 1825 with a stop at 1750. It bounces back to the moving average, and then what? It pulls back again, super wide range bars. But is there a pattern here? Let me ask you that question. What do you guys think about this? This one right here, where my cursor is, this second, is there a pattern here? What do you guys think about that? Talk to me. It's a retest, right? It's definitely a retest. It doesn't have to hit the bottom to be a retest. Do we feel good about this retest? Is it a good retest? Yes or no? What do you guys think? Good, bad, ugly? Hate it? What is it? That's a good... Yeah, I'd take it. Too steep. Too steep. Interesting. Okay. No, want a bottoming tail. Second bar is nice. Middle. So you guys aren't sure. Okay, let me ask you a question, just real quick, because this is how you need to sort this out. Climactics, right, parabolics, typically do what? 3-word answer. I know it's difficult. 3-word answer. What do climactics pretty much always do? Not everyone, but most of them, 80 or 90%. What do climactics do? STB. Okay, that's your hint. STB. Okay, that's your hint. I know, it's tough. I agree. It's a tough question. The answer to the question is set the bottom. That's what a climactic typically does. Thank you, Moises. Set the bottom. That's the answer. Set the bottom. Right? Climactics typically set the bottom. All right? I tell you, Jordan, you're slipping, my man. You're slipping. Your family would be upset with you. I'm kidding. I'm so used to you never getting anything wrong in these. But the point is, they typically set the bottom. Well, if they set the bottom, and in this case, we feel pretty good about it, huge bottoming tail, huge volume spike, huge move lower on super wide range bar, okay? And this happens. Bounces, retests. Do you guys know right out of professional trading strategies, what's one of the things I say? Climactics will sometimes take a second entry, right? Sometimes they'll just peekaboo up and put in a low. Well, in a way, this isn't a second entry. Well, it is a second entry, but it's a good entry. The first one worked in the second one. So when you guys talk about angle of retracement, I like it. I liked it because it bounced about 50%, exactly where it should bounce. It bounced back up to the declining moving average, exactly where it should bounce. Right out of PTS, there's three areas it bounces: minor price resistance, the moving average, and 50%. Okay? Then it pulls back, and I like how it pulls back. Why? Sellers are winning, sellers are winning, sellers are winning, sellers are winning, sellers are winning. Big volume spike, that's good. And all of a sudden, a doji bar comes in. This means momentum is slowing down. Buyers are beginning to step up. And we also have, most likely, 80 to 90% chance a low has been set. Whoa, Felix. What the actual what? Timeout. 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 Guys, do you see what Felix just wrote? Why is that wrong? Why is it wrong? Thank you, PS. Thank you, Moises. Okay? You never take the first sell setup after a climactic buy setup. You never take the first buy setup after a climactic sell setup. You never, ever do those things. Now, in this case, it would have worked. But that's not something you make a living out of doing. Okay? Now, it's right out of PTS, by the way. Right in the book. Right in the book. All right? Now, we pull back 1, 2, 3, 4, 5 bars. We've done about, 70, 80% retracement towards the low. We already know this is likely the low. Bottoming tail, huge volume, all the goods. So, what are you set to lose if you buy this thing just around $18 and put your stop under the low of the day? Right? I wouldn't be so hard on Felix, but he's been around. Should know the difference. New people, whatever, you make mistakes. Okay? This is two experienced professionals in here, Jordan and Felix. Man, I tell you, I'm just messing with you guys. Okay? Now, you get in at 18-ish, maybe it's a little above 18, I don't know. And you put your stop all the way down here. You're probably not going to lose on it. So, while I agree, there are some things maybe that are questionable, but with this low being set, it's not a huge risk to take that, because most likely it's either going to chop around in this range or go higher. Okay? But the key here is, the main point of this slide is not whether or not you want to take this retest. It's knowing that this is the bottom. This is the turn. Right? Knowing this is the turn means you're not allowed to short it anymore. If you don't want to go long on it, then you sit on your hands. Do you see where I'm going with this? See, every trade we have three choices. We can go long on the stock, we can go short on the stock, or we can do nothing with the stock. Those are really our three choices every time we look at a trade. We can go long on it, short on it, or sit on hands. We've basically taken those off the table, right? We're basically eliminating going short on the stock. So now you only have two choices: sit on your hands or go long. We're making your life easier by doing this, all right? So now let's take a look at another one. Knowing the turn. Here's a stock that's in a downtrend, staying below the 50 and the 200 MA, drops lower, consolidates, and there's a little breakdown right there. Okay? Drops, bounces, drops. Okay, so now, a couple comments here, right? One, why don't we short right here? All right? Hold on, let me insert shapes. Let's do this. Just for a second, appease me. Why don't we short right there? So that's the question. Why don't we short right here? Good. Good. I'm impressed. Too far from the moving average. Too far from the moving. It has not rested long enough. Okay? It has not rested long enough. Right? And this little, you don't know the double bottom is going to happen if you took it, because you can see, I'll move this little thing. Right? You can see there's a little little peekaboo. So you don't actually know the bottoming tail exists until after the fact. But it's not close enough to the moving average, right? I mean, the moving average is way over here, and you're trying to short here. You are really far, right? Really far from that moving average. So it's a little bit extended. Also, you're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, you're down a lot of bars with little to no resting period, right? You're down here, and this moving average gives you a good understanding. And look at the stock near the 200. Now look at the 200 over here. Look how far you are from the 200 compared to where you were over here. So yeah, you don't short here because you're too far from the moving average. Now, what happens? The stock then begins to rest. Great. 1, 2, 3, 4, 5, 6, 7 bars. This is a 60-minute chart. That's 6 or 7 hours of rest. Great. Now you can short it under this area. Put your stop loss here or a little higher, wherever you want. I go a little higher these days. All right. Stock tanks. Good entry bar, pretty wide range bar, and then a super wide range bar. Then I move that over just a little so you can see. Okay. Then we get a big volume spike with a bottoming tail on the third bar down. So what kind of volume do we consider that? Third bar down, super wide range. Do we consider that igniting volume? I wouldn't. I would consider that ending type volume, right? Because it's the third bar down. All right, now, it may not be ending volume, but it's certainly not igniting volume. I wouldn't consider it continuation volume because it's not a resting period. So I'm looking at this as ending type volume. So this bounces back up. Difficult question. What's the expectation? What is the expectation? Right here. Don't be scared to answer. It's okay to be wrong. It's okay to be right. Don't be scared. Crickets, crickets, crickets. Come on, stick your neck out. So you can't answer for the rest of the year? Wow. Wow. Maybe goes higher. Okay. Let's stop for a second. Too many of you, here's the problem. Okay? All right, there we go. All right. Too many of you are, one, you're scared because I asked the question, right? You're scared because I asked the question. And two, you're looking at the future, right? One, you're scared because I asked the question. Oh, I don't know. I don't want to be wrong. And two, you're looking at the future. I know they're scared to be wrong, Ollie. You know, grow a pair. It's okay. And then you're looking at the future. Now, do you have a different opinion now? If I shut off the future, do you have a different opinion? Does your opinion stay the same? I ask these questions on purpose because I can't make everything obvious for you. You don't learn that way, right? The expectation for me is this: a retest of the low with a bounce. Not because that's what happened, because that's what's supposed to happen. Let me repeat that. My expectation here is a retest of the low and a bounce, not because that's actually what happened, because that's what's supposed to happen. It's in a downtrend below the moving average. It bounced back up. It's supposed to. It's not a true climactic. It only dropped like $1.50. It's like a mini baby climactic, tiny little climactic. So I'm expecting a bounce. I'm expecting a pullback after the bounce, but I am not expecting a new low because of the wide range ending bar with ending volume. I'm going to repeat all that one more time. I'm expecting the stock to put in a sell setup and go lower, but I am not expecting a new low because that low has been set by the wide range bar on the bottoming tail with volume. Did you guys catch all that? I said it twice. Okay. Now again, some of you go, well, that's real convenient, Jared, because that's exactly what happened. Well, I understand that's what happened, but that's what should happen. Okay? That's what should happen. Now, The only question you have is, should you have shorted this or could you have shorted this? Maybe. If your expectation is a quick scalp, maybe Unmol took this and goes, hey guys, like BA, quick scalp, great. The expectation matches the reality. Perfect. That's great. It's the problem is when the expectation doesn't match the reality. That's a problem. The expectation here for a scalp matches. But now I know 1350, whatever that is, that's the low. And when I asked, does that make sense? You guys understand? Almost no one answered. So I'm guessing you don't understand. This is what was supposed to happen. The stock should have pivoted and gone lower. It should have bounced a little more back to the moving average, then gone lower and double bottomed. It should have bounced back to the moving average, gone lower and double bottomed. I don't expect this low to be broken easily or at all. Okay? All right, let's move on. All right, understanding the chart. Over here on the left, we have a question. Good buy setup. Number 2, good buy setup. Number 3, breakout. Number 4, did you get tagged at break even after raising your stop loss? I'll get to that in a second. So what's the best entry on the chart? So that's everything we're going to be looking at. Now, over here, it says, question, good buy setup. So, talk to me. On the left here, is this a good buy setup? The 1 really should be a little lower. I apologize. The 1 should be drugged down here somewhere there. Okay? Oh, you guys are just copying Jordan. Come on. Stop. He was wrong once today. He can be wrong again. You're playing the odds. The odds that Jordan's wrong twice in one day is like slim to none, so you're just taking the odds. I see it. I wouldn't take this thing. I wouldn't. Guys, this stock came in and shot out of the gates. Great, right? Wide range green bar. Hey, that's nice. That shows the buyers are in control. The next thing that happened is a big red bar came in, and you want to say, oh, well, it left a small bottoming tail. But the problem with the small bottoming tail here is the next bar was red. Right? The next bar was red. And then this bottoming tail, peekaboo, is under. There's too much uncertainty here. Again, I know I'm going to do it for the 3rd time today. Stop looking at the future. Stop. Start looking at it like this. Start looking at these things like this. Would you take that? I need more information, more confirmation. You know, there may be a scenario in which I would take this, but not from this chart. Again, I'm going to repeat. There might be a scenario in which I might take that, but not from the information I have right here. The information I have right here says big time uncertainty. Guys, tell me I'm wrong. Tell me I'm wrong. Tell me I'm wrong. Could this not be a bearish super 3-bar play? Could this not be a bearish super 3-bar play? Tell me. It's under the 50 MA. It's under the 200 MA. It engulfed the green bar. It has a narrow range red bar. And you guys are sitting here telling me, I love this buy setup. Not all of you, a few of you. Right? So if it could be a bearish super 3-bar play, why would you go long on it? Remember the general rule. If you don't get what you want, walk away. There's always another pattern. There's always another trade. You don't have to twist your head sideways like I'm doing right now to figure out if this is a good trade or not. Okay? So let's eliminate the big blue box. You guys get jaded by the future. You don't know the future when you take this, right? You don't know the future. So I would say pretty aggressive. Pretty aggressive. Okay? I've seen worse, but pretty aggressive. Kind of moves up and goes bam, wide bar, far from the moving average. Now, number 2. We're on number 2. What do you think? Yes, no, maybe so. I like it, I don't, I hate it. What do you think? Number 2. I would stay away from it. Do you know how often, though? Do you know how often you guys take these? Every day. The answer is every day. Somebody in the chat room every day asks a question about a buy setup that has like a 25% retracement on it and super far from it. Every single day it happens. Well, that's extreme. Most days it happens. It's funny how you're cool, calm, and collected in the middle of a lecture with no money on the line because there's no threat that you'll actually trade this stock because you can. But in the real world, you guys mention this stuff all the time. I mean, I don't know if Zach is still here, but that thing you did this morning, Zach, oh my gosh. I don't know if you're here. I hope you are listening, but if you are, whoa. Like, that's nutso. You literally took a flyer right off the open, and it just happened to work on a spready, whippy stock. But you guys do this all the time. You take a really strong stock, and you find the shallowest retracement possible, and you're like, hey, Jared, what do you think of that buy setup on the 1 minute or 2 minute at like 1045? No. In this case, it worked. Doesn't mean it was a good buy setup. Okay? So, goes up. What does it do? Finally catches its breath. I had a struggle in the morning. It was a long morning. Ripped higher. Went from 38.60 to 40-ish. Pulls back, bounces, and then does this. Now, once you get back to the MA from this area here where my cursor is, you're good to stalk this thing, put an order in for it over $40, right? You're right from that moment on, right here, you're good to look for an entry on this. The longer it waits, better it gets. The longer it waits, better it gets. The longer it waits, the better it gets. It had a long morning. It was a big time morning, Then finally, it breaks 40. You get in at 40-ish. You put your stop under here or under the pivot. It's up to you. You have like a 25-cent stop here or maybe a 40-cent stop here. Okay. And then it bounces and it pulls back. This is Jordan, stop taking my lines, my man. Were you trying to make up for the mistake earlier? This is the best entry on the chart. This is it. This is the best entry on the chart. Now, to be fair, the breakout's pretty good. It's pretty good, right? I wouldn't, if you took it, I'd be like, great job, nice play. But the pullback into minor price support, remember, the ceiling becomes the floor. The ceiling over here becomes the floor over here, okay? Then, the question is, did you get tagged at break even after raising your stop loss? I don't know, maybe. Right? You got in at 40, and if you had a 25-cent stop loss, it went probably, 30 cents maybe? Something like that. Went 1R, pulls back just a couple pennies below 40, and then rips. Okay? Yeah, just on the breakout, it broke the whole limit. Peekabooed under, penny or two. But anyway, this is looking at a chart, and the reason I use this chart is because it didn't start the day very nicely. It was actually kind of crappy till about 11 o'clock, right? I mean, it got nice at 10:30, but you couldn't trade it. And then it wasn't until about 11:30 till you finally got an opportunity to trade this thing. And then it was two afternoon trades that actually made the money. So the point I was making is if you have something on your list that you like, don't just take it off your list. Keep an eye on it. You don't know what it's going to do later on, right? So let's keep going. Still have, oh man, we gotta roll through this. We're taking our time today. Okay. Now let's take a look. We have a stock on the left that pulls back and rips, just rips. Stays pretty close to the moving average, doesn't get too crazy, chops around, bounces, and then finally pulls back, right? It had a little pullback over here, but that gap down, which is what that was. Now, let's be honest here. Let's do this for a second. Right there, okay? Let's make this pink, okay? The pink arrow. This is a gap down. You know that, right? This is a gap down the Boyd. This would have absolutely been on my short list. 100% chance. Why? It's taking out a green bar right here, taking out a doji bar here, and another green bar here. There's considered a pivot right there. This would absolutely be on my short list. That's where it's opening, right? Right at the tip of that pink line is where it's opening. Okay? So under this whole area on an extended move. So yeah, you're going to put it on your short list. And then it ends up being like an AMD or a Netflix or a NVIDIA stock where it just bullies. Okay? There's nothing you could do about that. The good news is at least it went higher right off the open. It didn't try to fool you. It didn't try to trick you. It didn't suck you in. It just ripped. But my point is, this would probably have been on the short gap list. I'm only saying this because I want you to be able to read and visualize the chart properly. This is a gap down that bullied. And it gapped down under 3 green bars. Okay? So, boom. All right? Now, stock goes up. Sets a top at 19, starts to pull back. Now, here's the question. As it pulls back, bounces, and retests, what is, and it's not on here, I'm asking you, it's not on here, what is the thought process right here? Right here, where my cursor is. I'm leaving my cursor right there. What's the general thought process here? Higher, lower, neutral? I don't know. What is it? Don't be scared to answer. Lower, higher, lower, lower, lower. Sideways, lower. I look at this as one of two things. Most definitely not higher. So remember I told you we have 3 scenarios, right? We have higher, lower, or sit on hands, chop, sit on. It's not higher for me. That's out. That's off the table. It's not higher. It's either lower or don't mess with it. That's me. It's lower or don't mess with it. Okay? Because I'm looking at this and I'm thinking, okay, you kind of have a pseudo 3-bar play-ish right here. Drops down. There's a little bit of support here. Bounces back to the moving average, but when it bounces, it leaves a topping tail and goes lower. So the expectation here is probably lower. Probably. But very choppy. Like meaning I'm not shorting it right here. Does that make sense? I'm not going to short it right there. But it's either lower or don't mess with it. Okay? That's the way your thought process. Exactly. It's like that neutral to lower thought process. But I'm not going to mess with it. I would rather have the stock continue down 1650, right? And then bounce and give me a sell setup at the green line, right? I'd rather see it go lower, 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 bounce back to the green line, then I can short it. But there's no need to take this. Remember that lecture I did the other day, maybe it was a week or 2 ago, where I talked about one of the reasons traders get themselves in trouble is because of ego. They feel like they have to be able to explain everything all of the time. Sometimes things are unexplainable. And that means do nothing. It means stay away. Only trade when you can explain it clearly. And that's what we're getting here. I can't explain this clearly. It does look lower to me, but I don't see an entry there. So I'll just wait till it does give me something that I can more easily and clearly explain. So anyway, then the stock goes wide range green bar. To me, very unexpected. Very unexpected, this wide range green bar. Pops in, wide range green bar. Then it starts to consolidate. Now you're starting to think, ooh, higher prices possibly. Now, is this a good breakout? Yes or no? Is this a good breakout right here? Right where that arrow is. Good breakout? Don't be shy. Greg says resistance to the left. Derek says I wouldn't have enough room to fit before the pivot, or hit target, before the pivot. Good. My expectation on the breakout is a scalp due to the double top. Possible. Okay, Moises. No pivot. Depends on your expectations. It's okay. And I think almost all those answers are kind of right. For me, generally, I would say it's probably not good enough, right? Because there's just not much there. There's maybe 50 cents. That's tough. And let's be fair. If you're going to take this breakout, you're probably going to use this stop loss, right? This stop loss is about 50 cents, maybe 60 cents. And we're borderline whether or not we have 50 or 60 cents in this. It's kind of tough, you know? Kind of tough, right? And then you have the double top. So again, to me, this depends a lot on expectation. Most likely, I would hold off. Now, if this is a daily, which it is, and you drill down to a 2-minute, then you might be able to find yourself a 20-cent stop loss. And we know the trade has 50 cents in it. Jordan, stop taking my lines, man. Ugh, you're doing it again. Dude, you're really trying to make up for that mistake today. My goodness gracious. But yes, you're correct. This is a daily bar. So my point is, if you're breaking out over 1860 or something, and this is, say you drill down to a 2 or a 5 minute, you get a 10 or 20 cent stop loss, you might find an intraday pattern that's acceptable within a 50-cent daily range. Does that make sense, guys? I just need a couple of yeses or nos. Does that make sense what I'm saying here? This is a daily chart. And on the daily, probably not something I want to mess with, right? I'm probably not taking it as a daily breakout. But if I drilled down and said, hey, the daily has 60 cents or 50 cents, so if I drill down to a 2, I might only need 20 or 30 cents. I'm okay. Good. I need you to see that. So the answer is yes and no. As a daily, not a great breakout. As an intraday, you might be able to squeeze in a 1 or 2 hour trade out of that thing. So now we bounce back up, retest the high, and what happens? Next day, it gets smacked. I mean, really smacked, because it's 100% retracement. Now, it didn't close there, but it did at one point retrace 100%. And then drops and drops and drops and just keeps on going. The problem here is there's not a lot you can do with this drop, right? Because there's still support here. It's choppy. You finally break the green line, but you break the green line after 3 days down, and it never really bounces. Okay? So when you start looking at this, you can understand here it's probably going to go lower, right? If we kind of move that over, right? It's probably going to go lower. But there's not a lot I can do with it on the daily until it goes lower and gives me some type of shortable bounce. All right? But this is an example of the stages we see, right? Stage 2 uptrend, double top, stage 3 retest and failure, and then we get into a stage 4 downtrend. Okay, you can see the cycle right there. All right, now, move that back. Next slide. God, I spend so much time on these slides. All right. On the left, we have a stock that ripped higher. Okay, you can kind of see the green bars there. Moves up, chops, chops, chops. Big old little topping tail. And then tankage. Goes from 66 to 48. This is probably reminiscent of that person in the When Will the Insanity Stop segment earlier today. These are now what we call bag holders. All these people should have gotten out. We talk about the cycles, stage 1, stage 2, stage 3, stage 4, the basic market's basic atom right out of professional trading strategy. You're a bag holder if you're holding this thing. You know, anywhere, I don't know where the support area is, but I'm telling you, you're holding this thing all the way to the floor, you're bag holding. So when you bag hold, all you have is news and hope. That's it. You start reading what the CEO is doing, when's the next earnings report, blah, 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 and then you drink some hopium. And then the stock still goes lower, 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 and it hurts. Then it bounces back up, chops forever, bounces back up. Okay, now, question is this an entry? It says entry, entry, entry. Okay, I should have put question marks on them. Is this a decent entry? What do you guys think? Right here. That area, give or take that area. Yes, no, maybe so? What do you guys think? Okay, you know, I need to do this more often. I'm going to do this again. Okay. Is it a good entry? All right. Tired of you guys looking at the future. All right. Maybe. Yes, but no, no, no. Aggressive, not for me. Need to look to the left. I don't like it. Okay. No. Topping tail and bottoming tail. Okay. All right. Notice I need to look to the right. Yeah, well, that's hidden. All right. Anyway, the stock drops from 66 down to like 47. I think we could all agree that that's a significant drop, okay? And the bars here are pretty good sized bars, right? Wide range bars. The volume, note the pickup in volume at the bottom, right? Notice the top was kind of quiet volume, and then during the pullback, big time volume spikes here, okay? You get a green bar, which shows a shift in momentum. Why? Because this is the first big green bar that we've seen out of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars. Of the last 11 or 12 bars, this is the first big green bar. We saw a little green bar here. This is the first time the buyers actually stepped up. They left a topping tail, but they tried. Then a bottoming tail, and then a bottoming tail, and we actually get one more bottoming tail, okay? It starts to get a little better, doesn't it? Why? Bottoming tail, bottoming tail, bottoming tail. If you drill down to like a 60-minute chart, you're probably seeing like a little W bottom down here, right? On a 15 or a 60. And you start to look and go, wow, the buyers are beginning to step up. Now, there's no crazy volume here except on the one green bar. So I would say it's not a great entry, but it's decent because of the confirmation of the three bottoming tails. And if you put your stop loss under the low, that's probably the low. Probably. Okay? Well, we're right and kind of wrong at the same time. Right? We're right. That is the low. But we're wrong in that it didn't really bounce very much. I mean, it took months for this thing to bounce. Right? Maybe a month and a half. And it finally broke out. Okay. Now, it's easy over here to say, yeah, that's a decent entry. Well, yeah, after a month-long consolidation, it is. But down here was a little bit more aggressive. So this is kind of the confirmation entry over here, right? This is the more aggressive entry. But you did take it after a climactic move lower and three bottoming tails. Probably not going to go below 47. Okay. So, interesting. 50 by 47, not terrible. And you just sit there and chop for weeks and weeks and weeks and weeks and weeks, and it finally breaks out. Now, the thought process here is that all the people who wanted to exit the stock got out. And then what happens? We go through the stage one. The stage one is indifference. No one cares. And you can see this by the lack of volume, the general lack of volume. So we have our stage 4 downtrend into our quiet stage 1 indifference, consolidation. Nobody gives a shit. And what happens? Starts to slowly move higher, and then what? Notice, imagine, look at this. The interest starts picking back up again. And it rips back up. And now, why do we sell off over here? Because this is where all the bag holders are finally like, thank you, God, thank you, get me out of the stock. It's the area where what? Sellers came in before, and they'll likely come in again. And in this case, they're definitely going to come in because of how it got there, right? 1, 2, 3, 4, 5, 6, 7 bars up, big volume, monster wide range bars. All the bag holders can finally breathe easy again. They got out. Yes, you could short it here at 62, stop at 66. Choppy, very choppy, works its way back down. What do you get? A big bottoming tail. Why? Because this is where buyers stepped up before, and it bounces. And that's a little bit of the volume spike there. This is that market cycle again. All right? The point I'm making is you can be slightly aggressive. I don't even think it's really that bad of an entry. It's actually a pretty decent entry. Or you can wait for the confirmation. It's just your choice. All right? Now, the heck is going on here? What do we have here? Reversal with a buy setup. So let's go to the left because we always start on the left. Stock is choppy and sloppy and just kind of all over the place on the left, right? Finally, it starts to move lower. We get this nasty topping tail bar, and then this wide range bar, and then volume, and then a reversal. Okay, now, question is this a buyable reversal? Yes or no? Right here. Is that a buyable reversal? Right where my cursor is. You got to look at it because this is real trading. Stocks look like this all the time. Is this a buyable reversal? No. The answer should be no. right? The answer should be no, 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 no. And I'll tell you two reasons why. One, it's a choppy piece, POS, right? It is. It's a dog with fleece. It's not Teldar paper, okay? It's a dog with fleece. This topping tail, this top, it's nasty. And that's it. That's all I get. I get a couple wide range bar with a bottoming tail and some volume. Like, Jared, that's a lot. It's not, because it's not been retested yet. How do I know it's just not going to give me a shallow little peekaboo and then drop? I don't know that. I don't. So no. Yes, it does reverse. So in hindsight, which in the future helps us, but right now it doesn't. Let me repeat. Past price action helps us in the future, but it doesn't help us right now. Right? If this is what you're looking at right now. So you don't buy that. No way. Yeah, you're far from the moving average. I get it. Yeah, it's a wide range, right? Yeah, it's a bottoming. Yeah, there's some. I get it. Too choppy, not enough confirmation for me. Okay? Stock then bounces. Pretty strong bounce. Okay? Chops, 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 pulls back, chops, finally moves up. Again, very strong bounce. Entry right here, stop loss right here. So, now I'm going to ask you a question. What do you think about this buy setup? We're above the 50 MA. We're above the 200. We had a moving average crossover. We're above resistance. What do you think about this? Talk to me. 11:30 buy setup. What do you think about it? Oh, you guys should really start watching some people's responses. No, 2-minute chart setup at 11:30. Ooh, Jordan, you're working it today, man. Your apology, I can feel your apology for being wrong earlier. Man, working it today. Okay, 2-minute at 11:30 is tough. It's tough. Yes, it's a nice engulfing bar, but you're about to see something, and you might change your mind. This is now the same chart on the right. On the right's the exact same chart you just saw, and on the left is the same chart on a 15-minute. This is the 15 right here on the left. This is the 2. Now what? Multiple time frame analysis. Now you're up 1, 2, 3, 4, 5, 6 15-minute bars with a double top resistance area to the left. Yaroslav's like, I like it. We're going to have another mentorship next year in October, November. I'm expecting to see you there. Okay? Because I didn't do a good enough job at this one, apparently. Okay? This just got much worse. It was tough over here. Now it's even worse. Because now you're telling me I'm up 6 bars on the 15-minute. 6 bars. And I'm at a double top resistance point. Right here and right here. What do you think is going to happen after 6 bars up on a 15 into a double top? On a generally sloppy stock, you can see how it trades. It's not the cleanest thing in the world. If this is the best thing you can find at 11:30, go to lunch. If this is the best thing you can find at 11:30, go to lunch. You don't take this. Whether it works or not is not even my concern. It's crap. Walk away. Walk away. What this thing needs to do is consolidate around 29.70 for about 4 or 5 bars, and then maybe there's a breakout here. Maybe, but not right now. Done. Pre-trade checklist, anyone? What's that for? Multiple time frames. Check your multiple time frames. Okay? 2-minute chart at 11:30 is tough. Extended move, tough. 15-minute, tough. There's just too much going wrong here. It's not worth. You guys work here. You work hard for your money, right? I'm assuming you do. When you go to your job today or whenever, and you look at your boss or you're there long hours, why would you just throw it away into something like this? I want to throw my money into something that has a really good chance of working and is obvious to me. I'm not trying to manufacture a trade, and nor should you. It's okay to say, not good enough, next. Let's look at next. Now, the trend is your friend. Oh my goodness, talk about cliche. 60-minute chart. Little double bottom area, breaks it on the gap down, continues lower, continues lower, continues lower. Now, we saw this before. What do we need to see to signal a reversal? Clear downtrend. Trend line. Usually draw my trend lines in orange, but whatever. Okay? You do not go against this trend. You either find an area to short or sit on hands. That's it. That's what you do with this trend. Okay? Unless or until... There he is again. Jordan, what are you doing? I need to get you up here. You know what I mean? You're 1 second ahead of me today on everything. It's got to reclaim the moving average. It has to put in a higher high, and it has to put in a higher... This is right out of the textbook. It's right out of the textbook. If you want to go long on a 60-minute downtrend, you better be doing so after multiple higher highs and higher lows. And all those trend lines are behind you or below you now, right? Moving averages need to be below you, not above you, right? So when you're looking at this area, you're not touching this thing. Now, there's temptation over here to go long. I get it. And yes, it probably has set the low, but it's pretty aggressive. You only have one higher high and one higher low, and you've just broken above one moving average. Okay? I know, he's like, are you even 12, Jordan? It's amazing, man. I mean, kids these days. See what happens when you pay attention to your parents? You can learn a lot. Point, though, is this is a tough trend to go against. In fact, you don't want to. You want to leave this one alone. And I know, I get it. I have one too. We all have an ego. And I want to be the first person, and I want to prove to everybody I got in at $42.60, and now it's at $46, and I was right. Great. Egos cost us a lot of money, right? Susan, I think you could probably answer that, right, from your trading years past. Ego is expensive, all right? Oh, there he is, Jordan. Oh, you're killing me. Ego is expensive. Let it go. I don't need to be the first one in it. I just need to make money. I just need to hit my target. And my target's probably not going to be 46. It's going to be much shorter than that. So let the stock show me it's actually strong. How is it going to do that? It's going to double bottom retest. It's going to put in a higher high and a higher low, or multiple higher highs and higher lows. Okay? Show me that there's more to this than just one gap up. Okay? Show me that there are actual buyers here. That's how you make money in trading, by not going against these types of trends. Same slide. Okay? Same slide. Now, acceleration, wide range bar, far from the moving average, right? Volume spike on the ending bar, higher low over here. There's the higher low. Breaks above the moving average, higher high, higher low. What are we seeing here? What do we call this right here? What is likely happening right here? ING, happening. What's likely happening? Begins with a T and ends with an N. Thank you, Brent. Thank you, Olivia. Jordan. Was that question mark? Like uncertainty? Jordan? Oof. I don't know about that. A question mark kind of ruined the response. Yes, the stock is likely transitioning. Setting a bottom, right, Patrick? Putting in a bottom and likely going back up. But guess what? I don't need to be the first person in it. You can be, and you might get paid for your aggressiveness, because there's probably a good chance it doesn't break below this green line or below this pivot here. Probably. It probably doesn't break that. So you could argue to get in at 42.60, but let's let it go to 44 and then pull back and I'll take it, right? Let this go to $44, then pull back to 43.50 and then I'll take it. I don't need to be the first one in. You could make an argument for it, but it's a little aggressive. So it depends how aggressive you want to be. I'd rather wait for more confirmation. Why? Because it's hard-earned money you're risking, and there's always another idea. Okay? Now, we'll end it with this. We typically trade our beliefs about the market, and once we've made up our minds about those beliefs, we're not likely to change them. And when we play the markets, we assume that we are considering all of the available information. Instead, our beliefs, through selective perception, may have eliminated the most useful information. Van K. Tharp. One of the best. One of the best. Trade Your Way to Financial Freedom is a fantastic book. Super Trader is a fantastic book. Very analytical individual. Very, very good. Selective perception. We don't think we have it, but we do, right? I'm not biased about anything. Yes, you are. We all have some preconceived biases from time to time. I'm not judging. Yes, you are, right? So we have to do our utmost, our best to stay as objective as possible. It's impossible to be perfectly objective, but we can try to be as much objective as we can be. As much objective as we, I don't know, that's a good sentence. Anyway, I really want you guys to read the chart. Put your emotions in the closet for a little bit. Let the chart speak to you. It's a theme of mine. You guys hear me say it all the time. Don't talk to the chart. Let it speak to you. Then process that information. Try to process what the market is telling you. And from that information and confirmation or lack of confirmation, you can make a more informed decision. And hopefully that more informed decision is a more accurate, profitable decision. Okay? But we all have selective perception. We don't want to eliminate the most useful information. This is where the pre-trade checklist comes in, because then it will eliminate a large part of the selective perception. Okay? So, I hope that you guys, through some participation today, learned a bit about pivots and reversals and when the turn will be, and that a good thing to do with all your trades and charts is to block out the future. Because then your perception changes when you can see the future. Well, we can't see the future when we're actually taking a trade, right? We don't know the future. It's easy when you look at the whole chart in hindsight. Block it out. Go bar by bar. See how that works for you. You'll learn a lot that way. All right? So, again, I hope that you guys learned a little bit. I hope it will make you a better trader. And I hope, again, you'll not be selectively perceptive, if I can say it that way, and you'll be much more objective after the fact. And just always remember this. If it doesn't meet your expectation, your criteria, don't take it. I know it's hard to lay off that fastball, but if that's not the pitch you hit, then you don't take that pitch. You just sit back and take, right? Same in trading. If you're uncertain and you're not sure, it's okay to pass on it. Wait till you get everything you want to see. All right? I'm Jared Wesley of Live Traders. We'll get back at it again next week.